Land in the Philippines isn't just real estate, it's a promise and a burden. For Santa Lucia Land Incorporated, the promise stretches across hundreds of subdivisions, townhouses, condominiums, and malls in more than 70 cities and municipalities. But in 2025, the burden became clearer. Suddenly, a company rich in assets and reach found itself facing a colder market. Revenue dropped by nearly a quarter. Net income fell by almost half. Returns on equity were cut in two. These numbers tell a story of a developer at a crossroads. Santa Lucia's secret has always been its provincial strategy. While giants competed for Metro Manila, Santa Lucia looked outward, turning 12,000 hectares into 300 projects. Few rivals can match that breadth. It's an asset that should power future earnings. Yet 2025 revealed a hard truth. With buyers wary, holding land looks less like untapped profit and more like capital stuck in the ground. Inventory stands as the defining feature on Santa Lucia's balance sheet. 43.45 billion pesos in real estate stock, up from the previous year, more than 60% of total assets. That inventory is both a store of value and a test of patience. In buoyant times, it promises growth. In slow periods, it challenges cash flow. With almost half of units still unsold, the pressure is tangible. Real estate sales fell by more than a quarter. The market didn't break, but the pace slackened, reminding everyone that land bank value is only real when buyers step forward. Yet Santa Lucia's operational platform remains formidable. Their reach, serving OFWs, middle-class families, and entrepreneurs, is extensive. Their network, over 135,000 brokers strong, is unrivaled. Joint ventures allow flexible expansion. But even with distribution muscle, demand rules the game. High interest rates and rising costs now stretch the sales cycle. Santa Lucia's installment-heavy sales model supports affordability, but it also depends on cash collections, an area that softened in 2025. Interest income on receivables dropped by almost a quarter, a signal that financing was less robust. Commission income offered a ray of hope, jumping by more than 130%. But core sales shrank and other revenues contracted, exposing how important the mix is to earning stability. In property, scale is impressive, but diversity and resilience is crucial. Cash is the metric to watch. Santa Lucia's cash and equivalents fell by 25%, down to just 2.54 billion pesos, driven by obligations and project cost. The current ratio improved, but in real estate, not every asset is equally liquid. High ratios can be misleading if most assets depend on selling or collecting. Santa Lucia isn't in crisis, but declining cash signals caution. Debt looks stable on paper. Borrowings were about 26 billion pesos, with the debt-to-equity ratio dropping. But interest coverage deteriorated. Profits still cover interest, but now with less room for error. The company faces the balancing act of growth versus liquidity, risk versus reward. Recurring income, mostly from malls and commercial estates, rose slightly. Assets like Santa Lucia Mall, Davao, and the Quinta Mall delivered occupancy and promise. But rental income is only 8% of revenue. The office side needs more traction. Recurring earnings help, but alone can't offset slow property sales. Costs only fell by 5%. Interest expense rose. Net income dropped sharply to 2.41 billion pesos. Returns on assets and equity declined. For investors, this means more caution. The company maintained its special dividend at 1.5% yield, a sign of stability but not a game changer. At year-end, SI stock traded below book value. The land bank attracts asset-centric investors, but discounts have reasons: slower sales, weaker cash, softening returns. The question isn't about land quantity, it's how quickly and profitably it turns into cash. Looking ahead, Sta Lucia's challenge is absorption. Accelerate sales without discounting too deeply. Improve collections, boost commercial occupancy, manage debt without losing liquidity. Devo Mall could become a source of resilience. Success means inventory becomes opportunity again. Sta Lucia land enters 2026 with reach and assets intact, but a more demanding market. Its land bank remains a foundation, but the path forward depends on discipline, demand, and the ability to turn promise into profit. Size is valuable, but speed and adaptability will define tomorrow. In property, the land you own matters, but the land you sell matters more.